What's up, Ichimoku traders? Chris Cooper here, secondskiesforex.com. So this video is actually a redo. We originally did this video a while ago, but then something happened in the recording and the sound kind of goes, it didn't just kind of go off, it went off completely. And so I didn't realize it till after because I didn't go through the whole video to test it. So here we are again, doing this again second time around, which is fine. I got a chance to make a few adjustments. But anyways, today's video is the Kifu 5 Ichimoku setup. We can just call it the K5 setup. So we talked about Ichimoku in one of the prior videos on introduction to Ichimoku price action theory. And now I want to talk about the actual setup and how this works, how we're going to apply it, trading with trend, counter trend, what we're looking for, what we're going to qualify as a Kifu 5 setup and not. So let's go ahead and get into this. So the time frames we're working for the Kifu 5 setup are the same time frames that we're working for within the course, the weekly, the daily, the 4-hour, and 1-hour charts. Now, to give you some kind of general guidelines about what these kind of generally represent, what they mean, and how we can look at them, is that when we see a Kifu 5 setup or a K5 setup on the weekly time frame, usually what it means is going to be large cyclical changes. So if the Kifu 5 setup is a counter trend signal, then it can often indicate that there is going to be a major structural change in that trend, or at least a solid pullback in that trend. If we're trading with trend, then it usually means there's going to be a continuation type move of that particular trend. Kifu by default is kind of communicating that there is this change in momentum, and it's communicating this through time and price action and wave theory disruption. We'll get into that in a little bit. But when you have 5 candles that are all the same color, usually that's going to create some sort of follow-through type move, especially when you use it in the right context and in the right environment. So that's kind of how we can look at it. Generally, these trades, these Kifu trades that you're going to be doing on the weekly time frame, you're going to be in them for months to years. If something has had 5 weeks in one particular direction and that direction is going to continue, you're going to be in that trade for weeks on end. It's pretty rare that it'll just hit in 1 week. So you got to anticipate that these are longer term type trades. So, you're looking back on charts on the weekly time frame, you're usually looking back years. So you can expect these to often indicate major reversals or major continuations. On a daily time frame, we're talking about swings and major reversals that can last weeks to up to about 3 months. They really shouldn't be going that much longer than that. Most daily time frame setups like that just don't last that long. So unless you kind of go into a period of low volatility and consolidation. So if it's a counter trend move, it can often mean a major reversal is forming as a result of this Kifu, and the Kifu is kind of indicating this. Or it's going to mean some sort of continuation type swing move is in play, in line with the wave structure that we have going. On the 4-hour time frame, you're really looking at short-term and medium-term swing type reversals if they're counter trend, or they're going to be extensions of the current trending move. These you should anticipate that they're only going to be open a few days, maybe a few weeks at the most. And down to the 1-hour time frame, these are just intraday reversals or short-term reversals. They're really just a short-term trading opportunity that you should be in and out of inside of a few days. If it's taking longer than that, then it's probably the wrong move. So these are just kind of time frames and guidelines for this. What I'd like to talk about now is entries, and then we're going to get into some examples, and we'll explain once we kind of get you into identifying the Kifu setups, and then we'll talk about stop loss and take profit. So the entries for the K5 setup are very simple. So if you remember from the introduction to price action theory, which talks about the Kifu to begin with, so there's really only 2 possible conditions for a Kifu 5 setup. And that is if that 5 out of the 5 bars were all bullish or bearish, they're all one color, or 5 out of the last 6 bars were the same color. And if that's the case, in either case, the 5th bar, if it's an upward Kifu, so it's a Kifu that's starting low and moving up 5 bars up, then the fifth bar has to have been the high in that entire Kifu move. And that will explain that a little more once we look at a chart, but that should be straightforward conceptually, that the fifth bar should have produced the high of those last 5 bars. If it's going to be a Kifu 5 setup where there's actually one counter trend bar, then ideally, so then we're working with 6 bars, 5 out of 6 have to be the same color, and the final bar itself cannot be counter trend. It would just negate itself because that would be a 5 out of 5. So we're really only talking about bars, 1 through 5. However, really for a Kifu setup, the first 2 should be at least one color. So the only counter trend bars, if there's 6 bars and 5 of them are the same color, the one bar that is counter trend should be bar number 3, number 4, or number 5. We don't want it 1 and 2 because we want those 2 bars to be the same color to be indicating, hey, from a time perspective, in terms of these candles, there is a change in momentum, or the market is starting to change. So, we got at least 2 bars moving in one direction. Then maybe the third bar is this kind of small counter trend bar. And then we have bars 4, 5, and 6 are the same color. So 5 out of those 6 bars were all one color. That would be a workable an acceptable Kifu setup, just in terms of the raw kind of structure of it. Option number 2 for an entry. And so, actually, sorry, I need to clarify one thing. When we have the above conditions, 5 out of 5 or 5 out of 6, our first option to get in is a close of that final bar. So if it's 5 out of 5, it's the close of that 5th bar. And if it's the 5 out of 6 and the 6th bar is the actual, the final one for the Kifu setup, then we would get in on the close of that bar. So that's option 1. Option 2, and we'll talk about this more when we look at charts, and this will make more sense in a little bit, is that we're looking for a 25 to 50% retracement into the K5 structure. And I'll explain why we would look for that option, what scenarios it would be more common, and what would that look like. If we're trading a Kifu setup counter trend, that means we're in kind of, let's say we're in a bear trend, but then we kind of form this D structure bottom, and then all of a sudden the D structure bottom forms, and then we get 5 bullish candles in a row. Well, for us to even consider taking that counter trend setup, we need those 5 bars to have disrupted the wave structure to some degree. So that would be breaking above. If the D point is below the B point, then that would be breaking back above the B point. C point is a little bit harder. That would have to be a very big counter trend move. It's more often than not that the B point will be the first one broken by Kifu. It's very rare that a Kifu will break the C move counter trend to the prior wave structure. This will all make more sense. Just try not to overthink this right now. This will all make more sense once we look at some charts soon, which we will be doing next. With trend, we are not looking for any wave disruption whatsoever. So there shouldn't be any wave disruption present if we're taking a with trend K5 setup. So let's get into some examples of this, and then we will talk about where you're placing your stop loss and take profits. Okay, so first off, we're going to start by looking at Kiwi Yen, which on the 4-hour chart has had a fair amount of Kifus over the last few months. If you notice that there's no 5 lines on the chart, and we'll kind of explain this later, but this is basically to help you kind of get the idea of seeing the Kifu structures without the 5 lines. So just to kind of spot them on your own. So we're going to show you some examples of the Kifu on the 4-hour chart over the last several months, and then I'm going to show you an example of a live Kifu setup I'm in right now. There's also another video on the Aussie dollar showing me actually using and trading the Kifu setup live right literally at the moment that I'm getting in the market, and then showing the follow-up of how that played out later on. So just to kind of give you something to work with there, like a live trade. But let's kind of get into this here. So Kiwi Yen has been in a bear trend for a little bit now. We kind of have an A, B, C, D structure pull back into here. And then we kind of have this A, B, C kind of D breakthrough here. And so as we break through this kind of B point here, the market has a little bit of a pullback, so kind of an A, B, C. And in this D leg down, we have a Kifu structure here. So let me zoom into this a little bit, kind of make it a little bit more palatable. So 1, 2, 3, 4, 5 bars, all same color, all same direction. It's the end of a D point move, so kind of an A, B, C, D. And so, what do we have here? We have a Kifu setup, and you get in on the close of this one here, and we have a nice extension, a little bit of pullback into the Kifu structure, and then eventually hitting the target, which is bottom in these candles or this candle right here. We'll talk about the take profit in just a second. You're probably wondering, how am I talking about a structure? But to give you a general format, the minimum plus R you're going for on a Kifu 5 setup is 1.25 R. All of these examples I'm showing you here are examples of plus 1.25 R setups. And then we'll talk about the Kifu setup that I'm in right now on the Euro Yen. And then you also have the video on the Australian dollar, which was about a 1.25 R as well on that one. So, but okay, so just to review here, we have 1, 2, 3, 4, 5 candles. The way I draw the Kifu structure basically is, here's the top of the Kifu structure. So this is the first candle in this case in a bearish Kifu structure marks the top. And the close of the 5th candle marks the bottom, not the wick, but the close of the 5th candle. So option 1 is you get in on the close of the 5th candle, and your target is 1.25 R. This thing from top to bottom, 77.28 to 77.93, it's about roughly 70 pips. So that means my target is going to be about 90, 95 pips. And so we're getting in on the close. This at 77.25-ish. And this one goes to 76.15. So this is like 110 pips right here. So it went way past this. We'll talk about the 50% retracement and which scenarios we want to use that later. I'll be explaining that towards the end of the video. But that was an option, this one. I'm just showing you the raw kind of Kifu setup right here. Let's go ahead and delete these to kind of make this less cluttered as we go along. Now, look at this kind of wave structure we have here. We have an A, B, C, D, right? Now, when we talk about using Kifu as a counter trend, the Kifu itself has to disrupt the prior wave structure in some format, and that means taking out the B point. To take out the C point is a little bit harder. It would have to mean that this kind of last leg was short and that there was a big 5 candle counter trend move to take out that. That's going to be much less common. What you're going to see more of when you trade Kifu counter trend is that the Kifu is going to break the B part of the wave structure, but it's less likely to break the C after the 5 or 6 candles. So what do we have here? We have an A, B, C, D, and then immediately after it's making new lows, what happens? First candle reverses, second, third, fourth, fifth. You have 5 blue candles in a row. And so that means we're getting in on the close of the candle. And let me move this box over to show you. So we get in on the close of the candle. This structure from bottom to top, or to the close, is 76.94 to 75.93. So it's 100 pips. So we're looking for 125 pip move or higher. So we're getting in 76.95. That would put us at about 76.25, 76.30. So there we are. And what does it do? It just kind of stays above this here, hovers, 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 and then boom, takes off. So that is another Kifu setup on this one here. Kifus are quite active on the Kiwi Yen and many of the yen pairs as of late. Here's another one. So A, B, C, D structure down. Then we kind of have a little bit of bounce, and then we kind of try and hit the bottom of that D point. It doesn't break through. And then we have 1, 2, 3, 4, 5 candles. Here's the bottom of it. Here's the close of the 5th candle. So 76.60 to 75.59. It's 100 pips. So again, we're looking for about 125 pip target. And that would be right about this one here. And we hit it on this leg up. So again, another Kifu structure on this one. It was counter trend. Is there any more? Oops, I think I skipped a couple. Okay, so now we have a with trend one. So if you look at this structure at the bottom, A, B, C, D, then what happens? We have in this structure A, B, this is a corrective pullback. This I wave down is a corrective pullback. It's one of the more shallower pullbacks. It's not quite a 50%, but it's not quite a flat one. So, but it's still a mild pullback. And then what happens is with trend momentum here, A, B, C, the bottom of the pullback is the start of the Kifu here. 1, 2, 3, 4. White candle, small, which is good. The counter trend candle should be small, ideally. Rarely do we want them to be big candles. In this case, it's small. 1, 2, 3, 4, 5, 6. So 5 out of 6 are blue. Here's the close of the candle. It also breaks the A-B point here, which is favorable to us. So what do? We get in on the close of the candle. And this structure from bottom to the top here is about 100 pips. So we're looking for a 125 pip move. 78.36, 78.58. That's, there you go. Actually, it was a little bit less than this, 38 to 36. Yeah, it comes out about right. I think it just barely tagged on this one here. So there's a Kifu structure right there. And then we've had, after a big mix, we had a failure. Let me stretch this out a little bit. Refresh. There we go. So we kind of have an A, very long wave down, B, pullback C, D, and then instead of having a nice price extension, it really just kind of fails. It has a short-term breakout here, and then it gets right back above the B point. So we have wave disruption here. 1, 2, third candle, white, 4, 5, 6. So 5 out of 6 candles. Blue, that's a Kifu structure, 59.96 to 76.18. It's about 60 pips. So we're looking for an 80 pip reversal, and we get it right about here or here. So that's kind of the basics of the Kifu structure and the Kifu setup. Those are some with trend and counter trend ones. Let me show you a trade I'm in right now on the Euro Yen. So we have bullish wave structure A, B, C, D, but then massive counter trend impulsive move for the most part. I mean, this is pretty impulsive. We break the prior C point. So we have good wave disruption here. So then we look at this as A, B, C. And then let's look at this here. This is actually a Kifu on the daily time frame. So we get the A, B, C, and then we have 1, 2, bullish candle, 3, 4, 5, 6. So 1, 2, 3, 4, 5, 6. Close the 6 candle, that's 5 out of 6 white. So on the close of this one here, this structure from top to bottom is about 200 pips. So we're looking for a 250 pip move from that. And that would be from here to here, and we hit it on this candle. Where I'm in is actually an extension of this particular move down. So on the 4-hour chart, let me show you something here. Let me reduce this one, and let me shorten this one here. Okay, so I'll show you what I'm in and why. So we have the A, B, C, pullback comes, hits the same area, and then we break through this here. So technically we had a Kifu before this one. 1, 2, 3, 4, 5 4-hour candles. And I should have gotten here. I missed the candle. And I was like, shoot, when I woke up, I was kind of like, this Kifu is already done. But then I looked at this candle here and I said, well, that's a pretty large bullish candle. And that did break the structural lows of the A to B point here. And so I kind of fudged this a little bit. I wouldn't call it an authentic Kifu setup, because if that was the case, I should have been here on the close of this candle. Instead, I missed it. This one closed. It broke this one here. And I said, okay, we're getting in on the 6th candle in this one here. And so my entry is at 128.83. I've decided to bring in a screenshot. This is my current open trades. I'm in at 128.83. Current price is 127.15. When I moved that out, I took that screenshot a little bit ago, but here's the actual current price, 127.09. So I'm in this trade right now. Right now, it's a live trade. It's a Kifu 5 setup. Again, I did fudge this a little bit. I should have gotten in on the close of this candle, but I missed that because of timing. Because this one had broken the prior B point, I felt like, hey, that should probably be a good with trend signal. I have context in my favor. I have a lot of things in my favor. So I got in on the close of the candle. And what I did is I adjusted the Kifu structure down one candle. So here we're talking about, it's a 210 pip Kifu on this one here. So I'm looking for about a 275 pip target. My target is actually a little bit more than this. I'm going for a much larger target. It's about 400. So I'm expecting a bigger breakdown on this one here. There's just a lot of support. And the reason I'm doing that, and I can kind of explain it. As you can see, this last leg down broke this major kind of structural support here. We just diced right through it. And so my feeling was, hey, once we dice right through this, we should probably be at a minimum maybe going for here, which would have been my roughly 1.25 hour target. A little bit more than that. And but I feel like it's probably going to make its way more towards like the 123, 124 area right here. Somewhere in this area, so I'm targeting the mid 124s, especially now that we've broken this major structural low here. We haven't been below this since Q2 2017. So I'm bearish on the euro yen right now, but that's the Kifu 5 setup on that one. I want to talk about a few things right now. I want to talk about stop loss and take profit. So take profit, we've already talked about, is going to be a 1.25 hour at a minimum. You can go higher than that, but if you are going to go higher than that, then I'm wanting you to align it with some sort of structure. That could be that, we're looking at, if it's with trend, then you're probably not going to have as much structure in your favor, because if it's with trend, you're probably breaking new lows in the wave structure. So an A, B, C, your D point is going to be lower than the most prior structure. So you're going to either have to lie it with further structure further back, or you're going to be aligning it with a D price calculation of some sorts. And so that's the only time you'll go over that, is if the D price calculation is saying like, look, D price calculation on such and such is like way down here. And I'm just kind of speaking theoretically here. So, based upon the type of wave structure they have, this type of calculation is saying that the D point should be around 126. And so if that's the case, and that's over 1.25R, then I'm okay with you going that. Ideally, the price point aligns with some sort of structure, in terms of price action, maybe, some sort of 5 lines on a higher time frame, the next time frame up. Because if it's the current time frames and you're below the Kumo, well, then the Kumo's not going to offer you a target. The Tenkan and Kijun aren't going to offer you a target. The Chiku's not going to offer you a target. So how could you use 5 lines? It would be the next time frame up. That would be the only way you can do that. That's the only way you can use some sort of 5 lines as helping you find a target beyond the 1.25R minimum. Only other options are prior wave structures and price lines that are lining up with it. In terms of the stop loss, super straightforward. So whatever your 5 bars for the Kifu is, then you're going to put your stop on the other side of the Kifu. So in a bearish Kifu, we're putting it just above the first candle, which starts the Kifu. And in a bullish Kifu, we are putting it just below the first candle in the bullish Kifu. How much? I usually put a few pips beyond it. I don't give it that much. My overall theory on it is this, and I'm having to kind of really meditate and extrapolate on this, because there wasn't a whole lot of information in the text about stop losses for the Kifu structure. They really just kind of intimated it and hinted at it, but they didn't give any explicit instructions on this. So after meditating on it for a long period of time, I felt like, okay, we put it on the bottom of the Kifu structure for a bullish Kifu, and we put it on the top of the Kifu structure for a bearish Kifu. Why? Because if the Kifu structure is the reason why we're getting in it. These 5 bullish or bearish candles that are saying that there's some sort of reversal in place. So if that's the reason why we're getting in it, then that should be the reason why we're getting out of it. And if those 5 candles are legit in detecting a with trend move or a counter trend move, then the market shouldn't go below that low of the Kifu, or it shouldn't go above that high of the Kifu. So it shouldn't go above the high in a bearish Kifu, and it shouldn't go below that low. That price action and order flow that created that 5 candles should hold. So that's the stop loss. Very straightforward. Literally just, it doesn't even matter what time frame you're on. I literally just put it, 5, 10, 15 pips below it, and that's it. It's very small. It's a very small amount. In terms of anything else, I've talked about take profit. I've talked about stop loss. I'm trying to look over my notes. Is there anything else? Oh yeah. One last thing. This is kind of a tip, which is that if you are trading a Kifu structure that is the end of a D move or in a wave. So let's say you have a wave structure And let's say it's something like A, B, C, D, and the Kifu is the last 5 bars, and that 5th bar is kind of hitting the D point of your price calculation. What does that mean by default? That means by default that there is a higher probability that after reaching the price calculation or your kind of relative target that you're looking for, that there's probably going to be some sort of pullback. Very rarely does something hit the D point and just keep running and running and running and running. More probable in any sort of wave structure that is A, B, C, D. So in a bearish D wave where the D is lower than the B point, if the last 5 candles are a part of that D structure there and we've hit it, then a greater chance that the market's going to pull back. So in that case, we would use option 2 as our entry technique, which means you're trying to get a pullback into the Kifu price action. So 25-50% in is generally a relative framework for what you can work with. I generally don't, when I trade pullbacks into Kifu, I'm not looking for a full retracement of the move. The more the market retraces the Kifu, the less confidence I have in that particular Kifu setup. So the pullback is going to be more often used when you are trading a Kifu that is part of the last wave, which is a C to D wave, and the 5th candle or the final candle of the Kifu is hitting or super close to your D point. If that's the case, then you should be looking for a pullback of that Kifu structure before you get in. And so that's my general recommendation on that. Okay, I think I've covered everything I wanted to. So that's pretty much it. I look forward to your comments and questions on this. In the beginning, you're probably going to have a lot of questions. For right now, before you ask a gazillion questions, because the questions are just going to come from you slowly integrating all these pieces of data into your mind, my general recommendation is practice first, ask questions later. So what would that look like? That would look like you taking a raw chart and seeing if you can identify potential Kifu setups, and then posting those in the course and saying, hey, would you consider this a Kifu setup? Would you consider this a Kifu setup? Would you consider this a Kifu setup? These are ones I consider Kifu setups. Do you consider this? So try and see if you can identify them just based upon the entry conditions that we had talked about. So just that's the first part of your practice, saying, hey, here's some ones that I think are Kifus. What do you think? Here's why I think they are. Here's why I feel they meet the criteria. What do you think? That's the first place to start. Then, and only then, after you've been able to get identifying the basic structure of a Kifu and entry points on it, then we can start talking about how you trade it. So instead of asking a million questions right off the bat, just practice identifying the Kifu structure itself, and then we can start working with questions. So practice first, ask questions later. So that's it. I hope you guys enjoyed this video. Make sure to check out my Kifu setup on the Aussie dollar. There's a live video on that and showing you how that worked out. Other than that, I look forward to your comments and questions, and I'll see you inside the course.